Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Good morning, listeners. Welcome back to Tax Insight here on WOMT Radio with Jeff from Hawkins Ash. Jeff, good morning, sir.
Good morning, Terry.
How are you today?
Doing well.
Excellent. Jeff, today we're talking about S-corporations.
Right, because during this time of the year, we get a lot of questions from sole proprietors as to whether they should change the way that they're taxed and whether they should look at becoming S corporations. And when I say S corporations and sole proprietors, it can be any type of entity that files their business tax return on their individual return. So this would include single member LLCs, those limited liability companies. So that's what I want to talk about today.
All right, so let's talk about, first and foremost, the difference between a sole proprietor and a single member LLC.
So in the eyes of the IRS, there really is no difference, as the IRS considers both of these types of entities to be disregarded. This means that all the income and expenses from the business are put in the same pot as the owner's wages, interest, dividends, etc. But from a legal point of view, the LLC tends to give you that extra layer of protection that's not afforded to sole proprietors.
So then how is the net income from these businesses actually taxed?
So they're subject to income tax and self-employment tax, which is essentially the Social Security and Medicare times 2. So as an employee, we pay Social Security and Medicare tax. What some don't know is that the employer also pays the same tax on the employee's behalf. But when you own your own business, you're essentially the employer and the employee. So you have to pay both halves of the Social Security and Medicare, and that's called self-employment tax.
Sure, makes sense. How much is a self-employment tax then?
It's 15.3% up to the first $147,000 worth of income. And then it's just the Medicare portion, or 2.9% after that. So the SE tax on $100,000 of income is about $15,300 plus your normal income tax. Now, as you can probably tell, people are looking for ways to reduce this amount.
Absolutely. So then where is the S corporations? Where do these come in?
So this is exactly when the S corporation comes into the conversation. So as a sole proprietor, you don't pay yourself a wage. So all of your income is subject to the self-employment tax that we just talked about. But as an S corporation, you only pay the, I'll put it in quotes, self-employment tax on the wages that are paid to yourself, not on the rest of your earnings.
Can you give us an example of that?
Sure. So using that example of $100,000 of income, your self-employment tax would be $15,300, like we talked about. But if you were a corporation and you paid yourself a salary of, let's say, $75,000, you would only pay the self-employment tax of about $11,500. So this would result in a savings of $3,800 just by switching entity types. Now, the income tax is exactly the same under either scenario. So the real savings by switching from a sole proprietor to an S corporation is that self-employment tax.
So then why don't all businesses just become S corporations then?
A lot of it is due to complexity. So an S corporation needs to file its own separate return, where if you're a sole proprietor, you just file it on your Form 1040. You also need to do payroll, which can be complicated because you have to do your quarterly reports, year-end W-2s, and everything like that. And so the savings of tax that we just talked about, in many instances, is eaten up by the administrative costs, which is why I think somewhere around $100,000 in net income is usually the time to look at switching from a sole proprietorship to an S corp.
Jeff, a lot of great information each and every week here on Tax Insight. How do listeners connect with the team at Hawkins Ash?
I would go right to our website, which is hawkinsash.cpa. Follow us on Twitter, or even like us on Facebook.
Awesome, Jeff. Thank you for your time. And we'll talk to you next week here on Tax Insight on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.